SOFI Technologies reported earnings last Friday, and as of today, it is now down 22% in the past 5 days after earnings, and in the past month, it is down more than 30% from its highs of around $31, $32. What the hell just happened to SOFI Technologies? What did they report? Were the earnings really that horrible? No. What? You read these numbers. You read these numbers and tell me if they're bad. Record adjusted net revenue of $1 billion. Record member growth. 1 million new members, not 1 million new members, not net new. These are 1 million net new members, 1.8 million new products, increased beat earnings, triple beat. What's wrong with SOFI then? What did they report in this earnings that made the entire stock drop 20%? To now below I didn't think I'd see below $20. I am so deep on cash secured puts on SOFI Technologies. It is absolutely wild. But honestly, in my opinion, right, I'm gonna talk about this earnings call, right? I just spent the past 30 minutes just scrolling through this and highlighting things that I found really important or noteworthy metrics in their transcript that I want to touch upon. But I do want to let you know, right, what I really think is the main culprit is a general rotation away from more high flyers and kind of a margin, or not a margin, a multiple contraction of just the stock market in general. Oh, it's falling. But also look at the Qs, right? Down 4%. Look at Bitcoin, down 16% in the past 5 days. Ethereum down 21% in the past. And now I have some remarks I want to talk about regarding crypto, Bitminer, MSTR. Again, what I believe, right? I think that's a Ponzi, but all those things, right? But I'm saying that for a different video. This video is going to be on SOFI Technologies, ticker symbol SOFI. Now, the first thing I want to talk about is just the people that are buying. SOFI is a retail stock, right? It's a retail favorite, right? What's also a retail favorite? Bitcoin is a retail favorite. Ethereum is a retail favorite. MSTR. Oh, let's look at MSTR. Let's look at this one. Oh, just really quickly. Okay, right. These Bitminer is a Bitminer, BMNR stock. This is a retail favorite, right? Look at all the YouTube videos talking about these stocks. The same people that are leveraged and on margin in these type of cryptos plays are also the ones that are in SOFI, right? So obviously, when you have people getting margin called because these things are going down really quickly, it makes sense that this would get pulled along because they're getting margin called, right? So that's just a quick talk about, I guess, the technicals of the stock. But let's talk about actual report and see whether or not there's any reason SOFI should be down other than those technicals, other than it being dragged along with the market with other people getting margin called. So I honestly don't believe there is a reason other than that, because their earnings was spectacular. What was it? Was it the best it could have been ever? I don't think so. I will talk about that later, but let's talk about just all the things I found really insightful. At this point, it's been a week since the earnings, so you've probably already watched 15 videos plus or minus regarding SOFI earnings and why it's down below $20 now, right? So let's talk about it. First thing, record 1 million new members, net new members. This is net new members. Net new members. What is happening? Why is it lagging? Okay, it's lagging a bit. Net new members, right? Let's keep talking, right? Let's keep going. Cross buy. This is what I was talking about in my previous video regarding products per member. When 40% of your new members are opened by existing SOFI members, that means that your members are sticky. Later on in the call or later on in the transcript, he also Noto, I think it was Noto, who talks about how most of the members they set up direct deposit with SOFI. What does it mean when you set up direct deposit with SOFI? That means that that's most likely that SOFI is their primary bank. They're not a secondary bank, because how many direct deposits does a person have? One, maybe two, if you have a reasonable side hustle, right? These members are sticky. And then when you have a sticky member, they add more value, and then they're more likely to be on the flywheel to buy other products, right? That's why you have this 40% new members opened by existing SoFi members, right? And that increases the products per member, which it did rise this quarter. I don't have the exact numbers on me, but it rose a few points. Next thing, net revenue, record $1 billion, 37% year-over-year increase. First $1 billion revenue quarter. Hello? Keep going. Total fee-based, these fee-based, okay. So if it weren't for how quickly how well SoFi was excelling on all sectors, right? Other than tech kind of, but we'll talk about that later, right? They're growing ridiculously. You just can't see it from the percentage from how much of their total revenue each sector makes up. You can't see it from that number because both sectors, both the fee-based revenues and also financial services or financial like lending revenue, they're increasing at like a similar rate, and they're increasing quickly at a similar rate. That's the only reason why you can't really see this change in the revenue makeup, or like the pie, that like the revenue pie, right? You don't really see a change in the percentages of either services or fee-based versus financial services. Is because they're both increasing so quickly. Rule of 40 score 68%. Fourth, right? Hello. Fourth quarter achieved rule of 40 score 68%, and they did that multiple times as well. Keep going. Brand building efforts. We have to remember, right? We have to remember what's happening later this year. The World Cup is happening at SoFi Stadium. They're currently at a 9.6, I want to say. Somewhere here it says like 9.6 brand awareness. You don't think that's going to increase when their stadium is hosting the World Cup? Hello? And not to mention, with it hosting the World Cup, SoFi, they announced, or they announced their SoFi Pay, right? To people around the world. You don't think that people that are going to SoFi Stadium, like foreigners going to SoFi Stadium in order to watch the World Cup, the Italians, the Spanish, anyone that's interested in their country's team that is playing at the World Cup, you don't think that they're going to be, at least they're going to take note of, oh, there's this new way to send and receive money that's SoFi Pay, and it's cheaper too. Maybe look into it, right? That's not too, like, also you have to realize that I think that when the World Cup comes out, that's the perfect time for SoFi to at least start kind of having their foothold in other countries if they want to expand globally, right? Not just being in the US, but having outreach globally, right? They already have a small presence in Hong Kong, right? They're already expanding their SoFi Pay to having more countries. I think they just added 2 more countries. I counted like 33 the last time I checked in SoFi Pay. Next thing, right? This no credit, liquidity, or duration risk, right? Hello? What is happening right now? A credit liquidity risk with people being in these stocks. Look at like the people that have their money in stable coins that's not actually backed one-to-one. Look at all the margin calls that happened when the stable coin depegged, right? When Binance's stablecoin depegged for a bit, that's not going to happen with SoFi USD because it's backed one-to-one with dollars, hard dollars in the Fed, right? There's no credit risk, there's no liquidity risk with SoFi USD because they had money backed one-to-one in the Fed, right? This is what I mentioned before. Over the medium term, we plan to offer SoFi Play experience to people outside the United States, allowing them to receive, send, hold, and spend money anywhere, all supported by SoFi USD. This goes back to what I was talking about earlier with SoFi Stadium and the World Cup. You don't think that's going to be the best freaking advertising opportunity that they'll have in a while to advertise this product? It's like the perfect type of like foothold. I think that's the right way to use that word, but it's the perfect type of like way to enter different markets, different countries. in order to get more people to use SoFi USD and in order to get more people to use SoFi Pay, right? Next thing. This is talking about our ambition is to be the bank for businesses and other financial institutions that want to transact in both fiat and cryptocurrency, filling a critical gap that has existed in the market. This is what I wanted to talk about. So I think one of the biggest critiques of this earnings is their tech sector, right? People are saying that their tech sector is underperforming, all these things. I want to point you to this graphic, right? You have all of SoFi's products in here, right? You have their SoFi Money, Relay, credit card, crypto, SoFi at Work, student loans, personal loans, all these things, right? You realize there's a reason why this wheel is pictured right above the tech platform. Now, I understand when people say that the tech platform isn't attracting as many customers, right? But the reason why SoFi is able to do this is because of their underlying tech platform structure, right? If they didn't have SoFi technology here, right? If this thing was gone, they would not be able to do this as efficiently as it is done right now. Does that make sense? So I understand that maybe they're not. I think later on in the transcript, I highlighted the one part that Noto talks about how they're in numerous talks, but there's nothing really set in stone for attracting more customers to the SoFi tech platform. But SoFi's own success is kind of dependent on their platform, their tech platform being good, right? Because if the tech platform is garbage, they wouldn't be able to do all this. And I kind of wanted to point that out when everyone says, oh, the tech platform is garbage, tech platform is garbage. Yes, it's not attracting as many people, but I think that Noto, people are also saying that, oh, Noto completely, I guess SoFi management dropped the idea of being the AWS of fintech. They basically just said kind of AWS of fintech right here. And also in later parts when he talks about like non-banks like United and I think it was Hilton Hotels, with them using it, right? Because AWS is really basically just, if you're not a web services company, then you can become a faux web services company, or at least have the products that web service companies have by just using their products, right? And that's kind of what SoFi is. That's kind of what their tech platform is, right? But and going on, that's just a mini rant about that. Now, let's see, what is this? I just highlighted this earlier, but I may forget. Now we see strong interest from an even wider range of companies, including those based internationally who seek highly supportive business environment in the US, particularly for crypto, and are interested in launching new products here. Okay, this is me explaining that there's going, like, especially with SoFi crypto now, that just adds to making the tech platform more interesting, or like more attractive to potential customers, right? This part, he talks about how their invest is attracting a lot of people because of the IPO market. I don't know if it's going to be as attractive in now, right? So I think that this might be a slowing sector, because I honestly used their SoFi Invest to sell options before. I just don't really like the interface and the current offerings of SoFi Invest. And also with the market maybe rotating, people might be more hesitant, especially retail might be more hesitant in order to try to like ape into these IPOs that are launching in SoFi Invest, right? So especially like you look at the likes of Figma, right? That's falling, Gemini fell, right? People might be a little bit more hesitant. So that's one thing that I could say could be a short to medium term, what's it called? Like hindrance, I guess, like something that might grow slower than expected. But let's continue. SoFi is, so here I highlighted, SoFi is the preeminent company offering personal loans originating roughly 15% of the total US prime volume. I don't know if this includes super prime, or I think that's a word, or like higher than prime, but this is crazy. 15% of total US prime volume. Let that sink in. How old is SoFi? How old is their company? What is it, like 8 years? And they already originate roughly 15% of total US prime volume. I think I didn't even notice this during the call, but like that's a crazy statistic. And it's probably going to be increasing even more. Look at the next part. Nearly 1 trillion of prime revolving credit card just sitting there, right? 1 trillion opportunity before even considering the additional debt that is outside of our traditional credit box. So if they were to increase their credit box to be a little bit more, I guess, ballsy, right? A little bit more risk, but not risk averse, the opposite of risk averse, right? A little bit more risky, I guess. Then this would increase their TAM even more, right? It would increase their potential, like the potential money that they could access even more, right? Next thing, we estimate that the total market opportunity is around 400 billion, which would increase 25% if rates were to drop by what? Look at the labor statistics that just came out today. What did we miss by what? 500,000 jobs? More than that? You don't think that is a catalyst to decreasing rates by at least 25 basis points, 50 basis points? They would see a 25% increase, right? And yes, the labor market is going to poo-poo, right? That might decrease rates, right? That might make more people more dovish on decreasing rates. SOFI is a lender, sorry. Why isn't that when the market now all of a sudden SOFI wants to trade like a tech company and not before, right? Oh, SOFI's a bank. It shouldn't trade like a tech company. Now it's SOFI's a tech company, right? And everyone's flying to safety. SOFI is the flight to safety. They mentioned that multiple times. Let's keep going. Turning down to home loans, best origination, right? It's growing a lot. When rates decline, again, right? Rates declining, especially when you see the labor market turning over, more likely that rates are going to drop and they're going to get more business, right? More originations. Let's keep going. Within our member base, about 98% of those that have home loans have them with other institutions. Remember what I said before that a majority of their members are using SOFI as their primary bank because they set up direct deposit, right? When you set up direct deposit, most likely with your primary bank, right? Now, if 98% of those have home loans with other institutions, you don't think that that is a market that they can access? Just think about it like logistically. Wouldn't you rather have everything in one app than to have to check 15 different banks for 15 different products? Right? This is something they can access, and they're able to access this because they're built on their tech platform, right? Which everyone currently is shitting on. Let's continue. These are just a bunch of numbers. If I wanted to highlight important stuff, I would just highlight the entire thing at this point. So you can read through it and it just talks a bunch of numbers. If you care about numbers, keep going. I really care more about the Q&A. Credit score 7. Okay, average credit score 765, 746. Average income 158, 149. I mean, we're not dealing with the people that have to take loans to buy groceries at Walmart, right? Hello. Also, people are super worried. Oh, they're lending out their private loans or their personal loans, and those loans might go bust, and then SOFI is gonna be screwed because they're overexposed. They're overexposed to good credit. What are we talking about? If this goes bad, the entire market went to crap already. I'm telling you, the entire market went to crap. If you see these loans going to crap. My computer is kind of slow right now. I don't know why, but yeah. Anyways. Next. This was one thing that might be a little bit iffy, right? You do see a 50-point basis increase or basis, 20 point basis point increase. Up 20 basis points from the third quarter. So this is up 20 basis points, which could be something that's dangerous, right? But you also have to see that it is our second best quarter since 2022. Right? Also, it's driven by a mix rather than credit deterioration. So basically what that means is it's not that people are just being less trustworthy, right? It's that they're basically increasing their credit box, which is something that that I mentioned before was actually kind of bullish because you're increasing your TAM, right? So the increase in our balance sheet charge-off rate is driven by a mix rather than credit deterioration. So they're basically they're lending to slightly more risky people to increase their credit box, and that's what causes their 20 basis point increase. But maybe they're getting more risky. But there's still later down, it says that the data continues to support our 7 to 8% net cumulative loss assumption for personal loans in line with our underwriting tolerance, right? So they have their risk in mind, right? They don't want to be above this. And they have this kind of goal or like this safe range that they want to be in. So they'll keep this in mind while they're dealing with increasing their credit box, right? If they feel that it's a little bit too dangerous and it might miss the 7 to 8% cumulative loss assumption, then they'll change it. But as for right now, they think that even increasing it is a risk that they're willing to take, right? Next, what is this? We retain fewer new loans on the balance sheet. Oh, sure. I don't know why I highlighted that. Let's keep going. Okay, this full year 2026, we expect to increase our total members by at least 30% year over year. I calculated it. That means in 1 year, they want to increase at least 4.11 million. So that means they're assuming that you will have from now on, or for at least 2026, at least 1 million members per quarter, or annualized average, right? At least 1 million members per quarter. Hello? That's a big number, right? We just hit our first million. That basically means that this quarter wasn't a fluke. Right, this quarter wasn't a fluke. Us reaching 1 million members, 1 million new members a quarter wasn't a fluke because they expect to continue this trend for at least the next 4 quarters. Right, keep going. And so this is Q&A. I read through this. Okay, right here. Let's see. What do you think? Okay, so this is Dan Dolev asking Chris about LPB in terms of how do you think about origination specifically? And then Chris, the point, he responds, what we're seeing so far in 2026 is that demand remains extremely robust and we have more flexibility than we've ever had as a company entering 2026. We expect total originations for the company will be up strongly year over year, right? So more companies, as they've mentioned before, the LPB and SOFI's loans are a flight to safety. People are using the LPB and they like it, so then they're attracting more members. They talk about this later, but then they say that they even just signed another customer, or another loaner, to the LPB recently, right? Revenue, we've diversified our fees, 44% in fees. We have excess capital. We have a lot of optionality. I think rates are continue. I think as rates continue to go down, our advantage will make itself clear. After that $500,000 miss on the jobs report today, you don't think there's going to be at least a higher probability of an interest rate drop, cut? Hello? Hello? Oh, here it is. Okay, a bulk of our deposits, almost 97%, are direct deposit customers. High quality primary account relationship, and that's what we're aiming for. That's what I mentioned before. I kind of gave you a sneak peek, so I just thought that was really interesting. So this is the part where everyone kind of harps on, which is the SOFI Tech platform. We don't have anything announced yet. We're in a ton of dialogues with different types of company, right? But as I mentioned before, as I kind of explained before, right? The LPB, the tech platform, is what enables SOFI to be so efficient, right? So, like, yes, maybe there's not as many customers right now that want to join, but that kind of just makes SOFI just think about what the tech platform affords SOFI to do, right? So I already explained this before, but I just think that people are kind of not realizing that the tech platform is kind of SOFI's moat, But whatever. I have a meeting in 1 minute, so I might have to cut this off. But we'll see what happens. When you have as many products that we have, you have an entirely new technology platform at a lower cost, faster speed, and it's safer. It could fundamentally change everything that we do. This is what I was saying 30 seconds ago about how the tech platform is basically SoFi's moat. It's basically SoFi's moat. And then SoFi wants to basically license off that moat to other fintechs or other institutions that maybe aren't even banks, so that basically they can get a revenue. And hello. Hello. Anyways, flight to safety. Okay, I have a meeting right now. Maybe I can. Okay, I'll be right back. Oh, damn it. And I'm back. Okay, let's see, where was I? Flight to safety. This is what I talked about before. We just signed a new partner this week for 2026 loan platform business. Okay, and then there's one last part I want to talk about when they're talking about the growth rate on return of equity, right? ROTCE. And then Noto basically says, I love this response. He basically says, we're going to continue growing at 30%. And if we grow less than 15%, it's because I'm gone. It's because I'm gone. Right. And then someone else did it. Right. Let me just read it. I would say that we believe we're building a business that will have superior return on equity, return on tangible equity. We still believe it's in the 20 to 30% range. We're not going to underinvest in the business to get to that number while we're growing at the rate that we're growing. Basically saying that we're going to stay at 30% while growing ridiculously fast, right? You should expect that we're going to continue to manage the business with a 30% incremental EBITDA margin, and as opposed to trying to drive it higher to maximize the ROE in the near term. As opposed to, so basically, we're not going to sacrifice growing for maximizing ROE. Ultimately, if you see us growing less than 15% revenue, you're going to see meaningful margin expansion and thus driving to our long-term ROE. But between there and here, which hopefully I'm long gone by the time we get down to 15%, from a not on the earth any longer, because I expect to be here for the rest of time, unless for some reason someone asks me to leave. I hope we never see 15%. In other words, over my dead body, will we hit 15%? So yeah. Oh, there's more. What else did I highlight? This is people were speculating what they might do with the capital raises, and Noto basically says that everywhere else or everything else is either crap or too expensive. So nothing's on the table right now, but if there is something that's cheap enough and also good enough, then maybe we'll buy it. But otherwise, we're probably just gonna do it ourselves because everyone else is either too expensive or, as I said before, just trash, just garbage. And yeah, that was the earnings call. So based off of what I highlighted, right? Everyone just points to the tech platform business, but is this reasonable? I think it's even lower right now. Highlight or okay, it's still okay, still 1982. But does that warrant a 22% drop in the past 5 days? Okay, there it is. There you go. That was much whatever. A 22% drop in the past 5 days. I honestly still believe it's because of this. It's because of this, right? It's because of this. It's the macro, and it's a rotation, and it's basically retail that was leveraged and margin, which I talked about before. How you should start like lowering your margin, start lowering your risk, because you don't know what's going to happen. You can see these 10%, 20%. This is a 30% drawdown in this with this administration. You don't know what's going to happen. I still believe that there is a Trump put in play, and I think that right now, honestly, in my opinion, Trump basically just wants lowered rates, right? And how do you lower rates? You destroy the labor market. But those are my opinions. I think that this drop on SoFi is completely unwarranted. It's at 1981 right now. I didn't think it'd go below 25. I didn't think it'd go below 22. I didn't think it'd go below 20. It's at 1980 right now. I think the low was like 1936, 1919 today. I did not think I'd see a 1 handle, but I'm an idiot, right? That just goes to show you that don't listen to people on the internet. But yeah, I'll talk about crypto, my thoughts on BM&R, which just, you know, when they say that you'd rather be rich, you'd rather make money and be wrong than be right and just like either lose money or just sit there. That's what I wish about Bitcoin, right? Because honestly, I didn't realize, I didn't think that the collapse in crypto would happen so quickly and also be so widespread. But then I also mentioned that in a previous video as well. But anyways, that's aside the topic. This video is on SOFI Technologies, ticker symbol SOFI. I'm still hyper bullish. If I wasn't basically 50% of my portfolio wasn't in SOFI, excluding the cash secured puts, which is probably like 60 to 70% of my portfolio now, I would buy more SOFI. But those are my opinions. Those are my thoughts. This is not financial advice. Have a good day. Go SOFI. This is bullshit.